I'm Greg Keough with DeFi Money Market Foundation, and really happy to be here at Reimagine 2020.
Hello, everybody. Thank you for tuning in to Reimagine 2020, the Halloween edition, Tales from the Crypto. This is our fourth event within the Reimagine series of conferences. I'll be your host today, Adam, from the MouseBelt team. If you missed out on any of our previous three events, feel free to visit the Reimagine 2020 website at ri2020.io for full access to over 150 interviews from some of your favorite projects and interviews in the space. Our main goal really is just to talk shop with some of the top projects and leaders in the industry to shed light, help us understand blockchain's real impact, innovation, advancements towards Web 3.0, and decentralized infrastructure of our future. So without further ado, I'll go ahead and introduce you to Gregory Keough. How you doing, Gregory, or Greg?
Greg, yeah, how you doing, Adam? Good to see you.
Good, man. I know this is your second time around, so we're happy to have you back.
Yeah, no, thanks for having me.
So this time around, man, first of all, thanks for taking time out of your day to kind of join us and chit chat. We've been hosting these conferences, every month, mainly because of the pandemic. Shit has gone all crazy in the world, and it's kind of expensive to go to these conferences, right? And travel and you kind of miss, we're trying to bring that to the audience now and our students and university partners across the globe. So first of all, thanks for having you join us. Let's kind of get into it a little bit. Just to put into context, can you just kind of remind us a little bit about the DMM Foundation?
Yeah, sure. So DMM, that stands for DeFi Money Market, and it's run by a foundation. And basically, it's pretty simple what DMM is trying to do. It's really just trying to solve the dual problems of one, currency debasement, and then the second is the near impossibility of earning interest. And so we have a DeFi protocol basically that empowers anybody connected to the internet who has crypto to earn 6.25% stable, uncorrelated yield on their assets. We do that through basically a protocol you can interact with. So a little like Compound in that you convert your either USDC, DAI, Ether, or USDT into what's called M tokens. And then this earns 6.25%. You can kind of come in and out at any time you want. One of the big differences and where we're focused is really, we know that in the crypto space, a lot of time yield can be like 1,000%, and then it can be like 0.2%, right? And so DeFi Money Market is really focused on a stable interest rate. And the way we do that is we actually connect, and the interest is generated from real world assets that are all viewable on chain. And this provides this very stable 6.25% return. And we use Chainlink oracles where all this information now is transparent into what's backing up the ecosystem and the portfolio, et cetera, that's producing this interest. So it's governed by a DAO, the DMM DAO. So, it's full decentralized governance. And we think that it's a new way that I think a lot of folks are interested in, because again, it kind of helps you solve the ability for fiat debasement, because all the assets actually are backed by real world assets. So if we have an inflationary environment, real world assets tend to do pretty good. And then the second thing is you can get the view into the underlying assets, and you get the stable 6.25%. So it's been pretty well received by the market, and that I think we fit a niche in the overall space, crypto space.
Lot to take in there, but let me first kind of take it back a little bit. You guys have been around for a couple few years. Is that right?
Yeah, so we actually started building this a while ago, and we took kind of maybe not the most traditional crypto approach in that we kind of didn't say anything. We did a partner with Tim Draper and the Draper guys, and they made an investment, and we actually built everything, and then we launched it. And so, yeah, we've been working on it for a while because it's actually pretty complex doing this and building it out. So yeah, we've been doing it for a while. We did kind of make it available publicly, I'd say maybe 8 months ago or so with our governance token, and we've continued to build from there.
And so I even want to go a step back further. What's kind of been your journey, right, to get you to this DeFi spot? Because you've been working on it for quite some time. DeFi kind of just picked up, but what I'm trying to get at is you were ahead of the curve on kind of like the application, the concept, the fundamentals of like DeFi, kind of what's going on with the global currency, the US dollars, pumping stimulus packages. Take me a step back into your journey on getting into blockchain, not so much your whole background, but just, again, you're ahead of the time, and now it's picking up, and then you're in a prime spot to launch. Things are moving. the market's moving, product market fit and all that. So kind of give us some insight there.
Yeah, so I mean, as you can all see, I'm an old man, so I have gray hair, and I'm also have my hair's falling out. So that's I've been around for a little while, but this is very reminiscent to me to the early days of the internet. So I had a very early internet company. It's one of the first kind of financial companies that Citigroup acquired, and I really got into the space really to solve my own problems. So I believe that, like almost everybody probably listening to this believes, and it's very evident nowadays with our governments, that the fiat currency is being totally debased, right? And so we've just seen one of the largest debasements probably in the last 6 or 8 months with the COVID stuff. Just kind of accelerated everything. And so in my own personal scenario, I was thinking through like, well, how could you develop something actually that has a sound financial backing? And you are correct. We were pretty early because we were one of the very early DeFi projects to kind of put out a governance token and do some other things. But we were trying to solve a really core problem. So when we looked at the two major problems, one is fiat debasement, and we've all talked a ton about that. But then the other big one is the lack of interest generation, right? So there's $17 trillion in negative yielding interest, right? So that's a lot of money, right? So there's 17 trillion where somebody is saying, I just want the bank to hold it, and I'm willing to lose money to allow them to do that, right? So that's kind of a very counter.
And what's the point of the negative interest rate? Is that for the for us to spend it, for us to invest it, to not put into the banks?
Well, certainly, I believe the global point of negative interest rate is to further kind of keep the economy going, right? But I do believe it's a fundamental sign is why would you need, and I don't know if you saw that, I believe it was the Netherlands, actually has a mortgage with a negative interest rate, meaning they give you money and you actually own less. So like, these are like totally, to me, bizarre things. They don't make any sense. I know there's tons of economists who are going to tell you, oh yeah, it's a new way of looking at things. I just don't buy it. I think that the system is based on constantly inflating our currency, spending with no checks and balances. And that's led to this scenario where we're kind of trapped where it must be low interest rates or the kind of thing explodes, right?
And so, which kind of also even takes me back even further, like when did you come across Bitcoin and did it make sense to you right off the bat?
So it's probably like, so when I think it was like 2011, I was a CEO for a joint venture between MasterCard and Telefonica, and was kind of using like mobile phones for financial inclusion. And so I got very interested in kind of blockchain and crypto. And actually, we mined a little bit of crypto pretty cheaply. Just not that I actually thought we'd make money off it, but just that it was intellectually interesting. It turned out mining at a very cheap price, and that worked out quite well. But I mean, I think that you could see the beginning of it. I just bought a lot more Bitcoin recently because I'm getting ever and ever more bullish. But I believe it's a fundamental change. And I also think, so one, I believe the financial system is broken and needs to be reinvented. And there's many people who are working on different things. And quite frankly, they're far superior to our current system. They're also much more difficult for governments to manipulate. And that's kind of the downside, right? Because governments like to manipulate the currency. That's for them, that's one of the tools in their bag. And so that is a very large systematic change, but I believe it's coming inevitably. And I also believe that the younger generations are aware of this. So, and a large amount of investment is coming now from millennials and younger people. And I think that that's the reason you're seeing JP Morgan and all these other guys now much more interested, because they see, oh, Robinhood, there's tons of money there. There's a lot of people investing. Products go where the investment money goes. And these people generally are interested in crypto, right?
Yeah. And I don't remember, and I was younger at that time, but were you familiar with any of the previous attempts at like digital cash, digital, e-money and stuff like that, like in the early 90s? Because we have a lot of viewers right now, right? That are students at universities. We have a lot of beginners kind of getting into crypto scene, and it's not really that new per se in the sense of the attempts were made, years back. And I think just now overall technology has caught up, and then there's a couple of other catalysts, in kind of the global currency and in currency and fiat in general, that kind of catapulted like Bitcoin just at the right time. Were you around for any of those attempts?
Yeah. So in the I remember the internet before there was a browser, right? Before Andreessen invented Mosaic, which became Netscape. And so there was actually Cybercash. I knew the guy actually who founded it. Great idea. I mean, it just was too early, but it was the very beginnings of thinking about how we could have digital cash, basically. And so there was a bunch of different attempts. They didn't really get off the ground. And I think we just weren't there because the internet wasn't there. I think this is dramatically different. I think that the main deterrent I think we have right now actually is it's still kind of complicated for general consumers, right? General consumers like things right? So I want to push on something and I want to get it, right? Still, to do things securely in our space, I think the knowledge level may be a little high, and the skills, like, it's more than the general consumer is ready for. But when this starts to get into easy to bite formats, which is happening right now, we know lots of people working on it, it's going to grow very, very quickly. And I think we're just kind of at that inflection point. We're very close to where it's going to be much more easy for consumers. The PayPal example is a great example, right? PayPal's going to let you buy crypto, right? We saw that this week or last week or whenever it was. That's certainly one of the steps that you're starting to see large players trying to enable this. But I still think there'll be many other players that will solve that. A little like the iPhone kind of like changed the phones, right? The phone had been around forever, right? But when the iPhone came out, it was like totally different view into the same thing. This is going to happen here as well. I think we're going to see finance and cash totally change, and it's going to be kind of in that same way.
And what about from, we're talking about crypto here. We could probably talk for days. This is already off to a great start here, but and kind of there's two different things here. So we're talking about crypto, Bitcoin, and other various DeFi projects such as yourself. Like, do you believe also then in the central bank, digital currency, like that aspect of it? Is that are those the same as a stable coin as opposed to central bank digital currencies and stuff? Like, what's your take on that? They're different, right?
So I think they're different. And I think that, you remember, the central bank digital currencies, I'm not a huge fan of, because we have the same problem. The person in control has no control over their finances, right? So what they're going to do. And with the digital currency, it's just going to be so much easier, right? And also, if there's anything they don't like about you, they can just turn it off immediately. They don't actually have to go to a bank to stop your bank account or chase down your physical cash. I mean, with a push of the button, you're out of business, even if it's wrong, right? Even if what they're saying is not accurate. So I think for that reason, people understand, what a lot of the people here are really trying to build in crypto and the DeFi space is that's part of the things. That's one of the risks we're trying to mitigate, right? Why should it be that way? And I think that that's an important differentiator. So I don't think, while I know they're going to exist, right? I'm not so sure that solves the real problem we have in our financial system.
And is that going to help our projects like yourself in the crypto scene?
I think it net helps because it's going to be easier and easier for more people to become used to it and use it. But I think you're going to have a larger portion of the population that may use that in some form, but will probably be migrating into other more decentralized opportunities or outside of the government domain.
No, totally. And like, it's kind of interesting when they used to think Bitcoin, was for drugs and kind of terrorist funding and all that. But like in reality, it's easier for them to track via crypto, right? Like,
correct.
There's they know exactly it's worse.
Correct. Yeah. So I think there's a fallacy there, right? That's not exactly true, right? You can track it exactly if you know what you're doing, right? And I think, and they do know what they're doing now. They might not have 8-10 years ago they didn't. Sure. But so yeah, I agree with you there.
All right, cool. So fast forward now, we kind of got the history, like, your experience and kind of the foresight of what's going on. And so tell me how like DMM, the foundation, gets launched, and how did you put your team together, and what was kind of that flow of, again, ahead of the curve and kind of seeing this bigger picture, and here you are launching a project. So kind of give me that journey from, Bitcoin to now you're launching going to start this project. How did the project even come about, and how'd you pick your team?
So we started discussing this with myself, my partner, Derek. Derek's an attorney. I've worked with him for about 10 years. He was actually the head of, he was a chief legal, regulatory, and compliance officer at MasterCard. And so started discussing it with him, started to discuss this with Corey and Adam, who also helped us build out the technology. And they were running a decentralized exchange, and started to see how like this whole puzzle could kind of come together to try to solve this problem. And that's how we started. And again, we did take we actually wrote up a white paper, but we didn't share it with anybody, and started to build. And we brought in the Draper guys very, very early on.
What year is this?
So it was probably 2 years ago. 2 years ago, as we were talking about it. We weren't building necessarily, but yeah, so we were discussing it. And so we started to build it. and got the white paper done, audits, et cetera, all the normal stuff. And quite frankly, when we launched, we weren't, because we were one of the very first folks to do this. We actually didn't expect that much. We kind of were just very, we thought, oh, maybe it'll work out. And it turned out that when we did our governance token, it was gone in I can't remember, hours, right? And we even had technical problems and stuff. It would have been going in minutes had we not. But I think we just happened to be very early on a larger trend, as you say. And I think that we can actually see that the trend has continued. I think we got a little kind of crazy in some of the trend stuff because, there's things with 1,000,000% return, which I'm not so sure that's sustainable. But again, we're seeing very interesting and innovative people working in the space, which is kind of key to this. So I think our focus has always been, we're building a very, very large kind of project. It's a long-term project. It's not a thing that happens in a week. But when you see this ecosystem entirely put together, you're basically going to have an alternative to the current financial system. And I think that that's what's important. And you're going to have it globally. I mean, we've already talked about, we have people coming on in Peru to introduce assets and other things. So it's really, putting together this kind of global plan on how something could work. And it really addresses the personal need I have. And I know a lot of other people, it's what do I do with my money? How do I make sure it stays safe? How do I make sure I can still earn interest? These basic things that were common 20, 30 years ago, you never had to worry about this stuff. I mean, the debasement you did, but generally you could earn interest at least. But now we're kind of in the worst possible scenario. And so if you look at it, this problem is really, really bad for folks who, if you're, coming up on the financial spectrum, this is almost a death sentence. And I'll tell you why. Because if you're working very, very hard to save money, but the money you save every day is worth less, and then make it even worse, if you save a little bit and you put it in the bank, they don't give you any interest. They take it away. Tell me how people can succeed globally. It's a huge problem for getting people involved in the financial system that's fair. And I see that this is a huge, huge problem, and it's going to stymie our growth unless we solve it. And I don't think governments necessarily are incented to solve this problem. And that's part of the issue.
And you're right. I think people forget inflation risk, right? And that's what you're talking about. It just, if you're not putting your money to work, inflation's growing by, on average, or the goal is always around 2% or so. It's just going to eat away if you're not, if you don't have a 401k, if you don't have traditional kind of financial instruments to, stocks and stuff like that to keep you ahead. So that's kind of interesting. And so then Tim Draper comes in and kind of backs you. How did that happen?
So we were talking with the Draper guys for a while, and they knew what we were up to, and we'd known them for a long time. And said, hey, we're working on this, kind of neat. What do you think about it? You want to come in? And said, yeah, they love the idea. I think they could see the bigger picture. What we're doing is somewhat complicated. So I think some people can get the big picture right off the gate. I think some people get slivers of what we're doing, which is also okay. Somebody say, hey, I could just make 6.25% off my digital assets, which is good. But there's much broader picture that, and a lot of stuff we're announcing in the coming weeks shows you'll kind of see the entire scaffolding of the ecosystem. So right now you see part of it, you don't see the full part of how people can put assets into the system. So we've kind of created a system whereby anybody can participate. There are very set rules and governance by the DAO, but it enables people to kind of then use these protocols to develop things, finance things, and do it globally. And I think when we get those pieces in place, it's going to get very large relatively quickly.
And what kind of assets are you talking about to get into the system?
So I'll give you a real example. We announced about a couple of weeks ago a group in Peru. They ran the largest hedge fund in Peru. And so we're going to do a test with them, and they're going to introduce real estate, vehicles, and there's one more. What is it? Oh, machinery. And so we use, in part of the protocol, we have all Oracle set up for pricing and all type of data with Chainlink. We have a very good partnership with them. They're a central part of what we're doing. And so they'll be one of the first people coming in, what we call an affiliate member. So there's two ways that you can be an introducer of assets into the system. So let's say you have assets like the type I just mentioned, and they're earning interest. So they have to be earning over 6.25% because that's what we pay out. And it always has to be over collateralized in value, meaning that if it's worth $10, you'd only get $5. And then it has to be over collateralized in income production. So if we pay out 6.25%, it must pay 8, 9, whatever, something greater. So there's parameters around what you can introduce. And so, but we're looking that it will get people, and you're going to actually be able to go globally, start to reserve countries where you may want to be the person, or you may want to resell the rights afterwards, to be an asset introducer. And this will allow pretty much anybody to turn on financing in their country at a reasonable rate. And the nice thing is, most of these things, because they're producing over the 6.25%, that overage is burned. So, not only is our system, against fiat debasement, but actually it's a deflationary system. And we did our first token burn. I think we burned 75,000 tokens, and we'll continue to do that. So what I think you're going to see is that a little like Bitcoin in this sense, there's going to be less and less and less tokens over time. And it's just the essence of what we're doing, because we believe that's the way to have a sound system. So
and
yeah, we're at the very, very piece of this.
And how's the process to onboard some of these assets, just at a high level, right? Like if people are listening to you talk about bringing in like traditional, like real world assets and that are generating income, and then in return, are leveraging the DMM platform. So like, what's kind of the flow like at a high level?
So to be able to introduce assets into the system?
Yes.
Yeah. So basically there's ways, and we've divided up the entire globe. Think of it like a map. And depending on how large the economy is, you can it depends on how many principal or affiliate members they are. So a principal member is like the top member of the community in a certain country. And underneath you have affiliate members. Now, those people make money on all the transactions that go through the system. So for example, an affiliate will introduce assets. They'll have a small percentage that stays for them, but then the principal who's on top of them also receives a small percentage. And so you have this very kind of organized pie. And what we're doing shortly is you will actually be able to go in, and this is all going to be represented with NFTs, and reserve countries. Now, you could reserve a country and you may want to be the actual person who introduced the assets, but in order to introduce assets, you must have one of these NFTs. And so in the case of Peru, they're buying one. And so this is the way, and then you have a certain amount of time to introduce assets. And if not, you can sell it. These will be traded, we envision, on exchanges. So that's kind of how it's done. And this is the way where we're putting it, as I say, this initial framework we're putting together. You're starting to see the first use cases of this. And then I think a lot of people then get the broader picture and be able to understand, okay, now I understand how this could work in countries across the globe. And if you look at it, this is where the kind of last piece of the puzzle that we do. So there's kind of two things I already mentioned. One is, I believe the DMM Foundation and DMM counters fiat debasement. I believe it also provides the ability to earn interest in a stable base. But third, it provides financing opportunities in countries around the world. So capital is not very efficient, right? So by anybody, let's say you're in a small country where capital rates are really expensive, even though the asset price is stable, you're willing to do a 50% loan to value ratio, meaning if it's worth $10, you'd only get $5, and you can have high interest rates. So this is kind of leveling the playing field for how interest rates can be across the globe. And it will allow people, whoever they are, right? You don't have to go to the bank. You don't have to fill out forms. You have to have these check boxes that are definitive that the DAO sets to be able to have an asset introduced in the system. But it's going to open up financing in new ways to I think, a lot of folks across the globe. And there's about $45 billion spent by large kind of corporations on financial inclusion each year. And I would argue that this is a great way that we can help with financial inclusion, because you're solving not only fiat debasement and ability to earn interest for everybody, but also the availability of capital. In many cases, maybe they could be small countries that generally it's very difficult to get capital in, but they're still worthy under the right kind of structure to have capital available.
Yeah, and I think it's important to know, like, or where are you seeing the most traction, right? I think a lot of people probably in the States or maybe developed worlds are not used to this crypto scene, and kind of, we're so accustomed to the dollar, and like, we have a global power, reserve here, and it's all good. But like, you keep bringing up kind of these other parts of the world, governments, capital's hard to get to, the unbanked probably. Like, where are you seeing a lot of traction, maybe in your due diligence, in your conversations? Where are you seeing a lot of the discussions at globally?
Yeah, so I think there's interest in a lot of places, and I'll give you a real, examples. So look at Argentina or Turkey. These are places, battling with hyperinflation. Argentina, I know the market very well. I've run companies there, et cetera. I mean, they've done this many, many times, right? They're used to this type of very difficult environment. So if you look at a system like DMM for a country like that, is here you have something that's very, very stable, right? It's based on physical assets. Even with hyperinflation, they increase in value. They don't decrease. Capital's dried up. So I think it's solving this kind of critical element. And I think as you see be, so certainly countries that are having economic problems or you're trying to hedge out of your country, this is a great way to do it, right? So you can immediately, so right now the assets of the DMM are basically US assets. So if you just want to diversify out of your home country assets, you could do it right now on DMM. So I think we're also seeing, the developed world. I mean, Europe has generally negative interest rates, and there's tons of capital in Europe. And so I think that we're seeing a lot of interest there. And then lastly, Asia. Asia obviously is a great market, and we have a bunch of things going on in there as well. So I think it's, we're solving a big global problem. And I think there's demand and interest all over the place. And this is part of what we're just ramping up the foundation to deal with.
Yeah, no, interesting. And, all throughout crypto, we in this bubble a little bit, we talk about the unbanked and kind of hyperinflation, Turkey, Argentina, a few other countries and stuff like that. And you can't really ban it either. And that's kind of like the purpose of crypto. And they can't really control that, which is a goal. Talk to me about some of the partnerships. I was looking on your website and you have like a lot of great big name partnerships. What are some of those relationships, strategic relationships?
Yeah, so we're building a lot of stuff like behind the scenes. So one of the things, and some are announced, some aren't announced.
Yeah.
So we have a bunch of different integrations. One of the things we're really focused on right now are integrations for people and the M tokens. So there's lots of crypto out there. We all know USDC, USDT, et cetera. And there's many people who are getting little or no yield, or they're, so there's a big problem there. So one of our big focus has been working with folks on integrations of M tokens. On the 28th, we have an announcement of a relatively large group that's integrating both DMG and then M tokens, et cetera. So I think you'll see a lot of those integrations. We work very, very closely with Chainlink. And again, all the oracles we use are from Chainlink. And it's kind of one of the key, I think, use cases, because you have to have these oracles, right? When you have real world assets, you need to have all these feeds. You need to verify the data. It needs to be, so it's an incredibly important part. And so we're building a lot of things with them. Some is out there, some is not out there. And so I think, we're looking to basically partner with anybody who's interested in kind of building out this ecosystem. I think we see other non-Ethereum blockchains as well that we're in discussions with. So it's, again, I think we solve one problem. I think and it's one portion of the problem, right? So we're really looking to provide that very stable, uncorrelated yield to folks, right? That 6.25% that just stays that way. And you can see since we launched, it hasn't varied at all. It stays there. There's been a lot of capital in and out of it. And so I think that this is a use case that is of interest now. I think it'll be of more interest in the future. And then lastly, when more corporate and regular investor money comes in, whether it's from hedge funds or wherever, I know this is a project that will, a product that will resonate with them, because they can readily understand it, right? They can understand very clearly how the yield is generated. They can actually see the assets. That's something that you can't do in the traditional financial system. You can't actually see every asset behind a loan portfolio of cars or mortgages. You don't see it. And so I think these things that we're doing, actually make it better than the current financial system.
And I meant to ask you earlier, when you formed a team and you kicked this project off, did you guys all just leave your jobs?
So everybody's full time on this. So we were kind of twirling around with this, but everybody involved is full time. And then we probably hired 8 more people, and then the development shop. So we're starting to go quicker and quicker. But to be quite frank, as I did share, we were kind of like, when we went out of the gate, we were really thinking, it's gonna kind of slow and steady. But things went very, very quickly, which is good. So we're trying to move as quickly as possible. But what we're doing is complex and will take time. But I do think at scale, the result is going to be pretty interesting.
Yeah, no. I think as we all know, this space moves pretty quick, ups and downs. What do you think about how the market bounces back? Relatively steady with no kind of stimulus package or anything like that. What do you think about kind of the ups and downs, but how quick it kind of bounces back over the last 10, 13 years or whatever it is?
The general economy?
No, like the crypto market.
The crypto market. Yeah, I mean, I think we're going to have, so we're still kind of not totally decoupled, right? I don't think, personally, right? So you saw we had a big, when the stock market went down, we also took the hit in crypto. There was a hit today. It was less so I don't think they're uncorrelated yet, but they will become uncorrelated. And that's one of the key things I'm looking for. But we're closer every day because you see more and more people, including from the traditional finance arena, and I spent a long time in the traditional finance arena. Generally, they're not innovating in the space generally, right? They're not seeing things, way into the future like a lot of people in this space are seeing, right? And but when they come, it's big because they have lots of capital. And so I think we're at the very, very beginnings of this, but it's inevitable. We are past that inflection point where, in my personal judgment, it's inevitable that it happens. If you asked me 5 years ago, it's like, I think it's going to happen. Now I believe it's a matter of inevitability.
Well, what do your friends in kind of the traditional finance world think about this whole thing?
I think they love it and fascinated, but it's too hard for them to do. So like we have a family friend who, has pretty good net worth. And when you start explaining what they had to do, okay, go to Uniswap, do this, like it's just too much for them, right? So like they could hire somebody to do it for them, certainly, but like we're just not quite, as I said, it comes back to the ease of use. But there's tons of capital interested in coming in. I can tell you that. It just hasn't been made easy for them yet.
So, and are they, obviously they're bullish, they're believers, they're still critics, or they know it's the inevitable, it's just timing and kind of security, regulation, compliance, the rest of the challenges and barriers, right, from traditional mandates that they have. So are they're just kind of waiting for the right time?
I think they're waiting for it to be easy, but I do think if you look at the journey we've been on, we started with JP Morgan and Jamie Dimon saying this was a fraud.
Yeah.
And now they're saying, I don't know, a couple of days ago that Bitcoin's going to do great, right? So like, I mean, that tells you something about it, right? So there's like this, they've come along a journey, right? In general, right? They're usually late to the party, but that's okay. They get to the party. But I do think that we'll see, and you can see it more and more people saying you need a certain amount of allocation, especially in this environment, to gold and Bitcoin. There's tons of traditional financial people saying that exact same thing. That tells you something, because what people don't realize is the large capital has not even entered this market yet. No. Hasn't even come. And we're talking about trillions of dollars. I mean, huge amounts of capital. This is nothing compared to what we've seen, but it's very close. It's very close. And it's going to come in crypto. I think it's going to look for interest generation as well, things like DMM. And I think they've realized this is one of the pieces of the puzzle I need in the overall portfolio. I'm not saying they're going to say put 100% in, but they're certainly going to say allocate 5%, 3%. But that 5 or 3% is a tremendous uptick to where we are right now in the industry.
Yeah, I mean, we just saw Square and a couple of the other bigger players kind of put some reserves in there. And
MicroStrategy, right? MicroStrategy put their treasury in Bitcoin. And that's a company that's been around for a long time, very successful. Technologies, they're very savvy technologically. I mean, that tells you something, right?
Yeah. And it wasn't a small number, like 500 million or something like that. We actually have him on the conference. He'll be joining us as well. But so you just touched on kind of like the UI UX. How are you guys approaching that?
So one of the things that's kind of interesting is, so we're obviously working projects to do that, but then the Draper team also has an initiative called Reserve, which actually I think is going to be very, very successful because it's simple. It's basically, I would like to earn interest, and they have it all kind of integrated. It's due to be launched not in the too distant future, but I think that's a great example of how there are going to be many, many apps created that just make it simple for people. People are like, listen, I have $1,000 and I just would like to earn 6.25%. They don't need to know anything beyond that, right? It's great that, you're using a protocol by real world assets. That's great. But really, they just want it simple. And so I think we're going to see more and more of these folks. Reserve is a great example. Others interacting with the DMM protocol to enable this to happen, because the demand for interest, stable interest, right, that's secured by real world assets is immense. And so that's one of the things we're spending a lot of time working on. And we're in discussions with IRAs and investment managers and all these different groups that are at the very beginning phases of this, but they all want to do this. So I think that's going to be a major, benefit. It's going to be great tailwinds to our industry.
And what's that timeline? And I'm not asking for a prediction, but everybody, these things are rolling out. Products are more maturing. The industry is maturing. You have, teams like yourself that understand what they're doing, how they're building it, what the solution is. Are we talking about a lot of these IRAs? And, I know obviously there is some allocation depending on where you go that are putting, I think the number is like 2 to 3% or something like that. What's the timeline from those discussions? Like in the next few years, I'm assuming, or even further?
It's quicker than that. No, I think it's quicker than that.
Wow. Oh, wow.
So yeah, no,
Yeah.
I think in the next 12 months you're going to see good use cases of real IRA companies starting to make these things easy to do. I don't think it's that far out.
Awesome. Awesome. And just to keep moving on, you brought up DMM being a protocol. What's the difference of like a protocol and a platform in the terms of composability, right? Are you kind of like a money Lego where you can plug into any other dApps and kind of leverage, your service and put other services together?
Yeah, so basically you can use the DMM protocol to do whatever you want. So there's a lot of people using it now. Again, Reserve was one example. There's many others too, saying like, okay, I have clients, or let's say I have a wallet and I have all these people in the wallet, but their assets are just sitting there. Well, why not plug it in and ask them, hey, would you like to get 6.25% off USDC, for example, or ETH? And so I think you're going to see a lot of that. And that's where I think that makes it interesting. We're kind of focused on what we're doing, which is this one niche of providing this kind of product and stable yield in a certain way. And then I think you're going to see lots of people, and this is where, but when more even traditional money comes in, I mean, a lot of people are going to use it now, but traditional money, I think, is going to use it even more, is that it's just very easy to plug into and use, right? So we think it's going to be, part of, many different wallets, many different apps, many different products. And it's, as you say, I think you put it right well, it's kind of a Lego you can plug into if you want that type of yield, right? And it may be, and what I envision in the future is you'll probably have people putting together actual yield portfolios, which will say, well, listen, how much do you want it to be stable? Well, 10% has to just be stable all the time because I want to live off. Great. Maybe we'll put that in DMM. Now, how much do you have a risk for, some more variability? Okay, maybe we use compound for that. So I actually think you're going to see very unique products being developed using all these different kind of interest generation opportunities to develop kind of totally new financial products. And the great news is because yield is unavailable, it's incredibly appealing to consumers.
Yeah, and I think you touch on a little portfolio management there, kind of from the traditional aspects of allocating your assets, stocks, bonds, alternatives, private equity, all the above. And this, which I never really thought about, like you said, aggregating a lot of these different instruments on the crypto side. And would you say we're just replicating traditional legacy systems just in a more, smart contract automation kind of way as far as
No, I don't
innovation?
think so. I
No?
think there's some replication, but I don't think so. No, I think it's going way, way beyond it. So if you look at many of the, again, the fact that you have this protocol that you can just plug into and get 6.25%, that really doesn't exist in the traditional market. The fact that you can actually see the assets, that doesn't exist. So, and I think there's many other people doing things as well. So I think obviously there's some basis to the traditional system because that's what we're replacing. But I think the way it's being gone about in general by the industry in the DeFi space is very, very different and far, far superior. I mean, if you look at the trustless nature of it, all these other things, that's just, as I always say to everybody, if you have money in the bank and you think it's your money and you have any amount over $10,000, just walk into your bank and ask them, I would like any amount. It doesn't even need to be 10,000. Just say, I would like the cash, 10,000. And you'll see, you'll get a host of questions. So my real question is the money really yours or is it the bank's? And so we've kind of solved that problem.
And do they really have it? I come from the bank and
yeah, hopefully they have it, but even, yeah.
You have to call it in to get your cash and set up an appointment. I mean, literally, no, physically, they don't carry like that much cash in the banks, and so is it your cash? You got to wait, it's a process. And,
not only that, but they're going to ask you all these, like the thing that I really think is weird is they're doing KYC and ML on the entrance of cash. I get it. Right. But then when you ask to take it out, right, they've already done the check going in. Why do they need to know what you're doing with it? I mean, if you want to take it and throw it out on the street, why shouldn't you be able to do that? And it's part of I think the overbearing nature of our financial system. Nobody wants money laundering. Nobody wants those things. But you did that check on the way out. So what you're doing to spend the money shouldn't matter at all, I would think. But that's not the way our system is set up currently.
And how do you handle audits and compliance and KYC, AML? Is that anything that you need to be, that you don't take lightly?
So it's a protocol at the end of the day, right? And it's governed by a DAO. So while we have legal opinions from our attorneys, both over our governance and the other things, we're definitely breaking new ground. I think that if you look at kind of our statistics, generally we're looking at smaller amounts of money, right? So it's not like $1 billion. So these are not systems that in their very essence are kind of favorable, at least at this stage, to kind of the bad uses, I would say. But definitely, I think all the DeFi space is looking to have protocols that are, anybody can interact with just with an internet connection. And that's certainly the reason why it's a DAO that governs all this.
Exactly, which is important to note. And did I recently read like in like the first, I don't know, like 4 weeks, you had thousands of wallets like downloaded or
There, I saw a figure, and yeah, there was we've done. I'm trying to think. It's the interactions with us, and I think it's a 250,000. It was a lot. I can't remember exactly the number, but it was a big number. And the thing is, because you can see people just kind of come in and out. I mean, like that's the beauty of it, right? So, like if you want to put $100, you can put it in for 2 seconds. You do earn that. It's every hash you're earning the interest, so you don't have to wait like a bank, or they're compounding these things. We're doing it, basically every hash. So, yeah, I mean, I think that there's a lot of people using it, testing it. I still think we're very, very early on where people are trying it, testing, and that's what I always tell people: try it. It's very simple to do, right? If just go to DeFiMoneyMarket.com, click on the app, and you can convert USDC, ETH, whatever, into tokens, and you can convert them right back out if you'd like to, just to see how it works. And that's the big thing and that's part of the reason when your initial question is, why do we try to build everything up front rather than saying, oh, let's do this and then build it? The main reason was because I think it's very important for people to be able to try things and then say, oh, I hate it, I like it, whatever. But that's kind of a different approach I think that we take, is like we like to build these things and then see what people think about them, and how they use them and how we can make them better. So I think when we look at product market fit, we look at it we do look at in a very traditional sense, I would say. We want the consumer.
Yeah, definitely. And what's your take on some of this the forking of projects and like yield farming and some of these other, crazy, I forget what it's called, like the vampire, I can't think of the name right now, but what's your take on, and some of the yield farming, the exchange aggregators and some of these other features coming out in the DeFi space for the last few months?
Yeah, I think that we've gotten a little bit crazy in some of this stuff. I had somebody tell me that they're all making, at one point, I believe it was 1,000,000% yield. And I was like, well, how is the 1,000,000% yield being generated? Because that's really the key. And again, it's come back kind of to normal. But again, I do think it's interesting because you're seeing people kind of playing with these Legos to create new things, right? And so if we're really trying to reinvent this thing to make it better and more interesting, that's the kind of experiments you need going on. So we have the ability where you can farm, and I think with us, you're getting a benefit that's pretty good. It never was 1,000% or whatever, but it is, it's a good way to earn DMG if that's what you're interested in. It's very simple, and you still get the 65%. So I think we'll continue to see that. I do think we went through a little bit of frothiness in the idea of totally like unsustainable rates, but like all things, the markets take care of it, and I think this has already started to kind of normalize.
Nice. So we got like a couple minutes here. I know you have a few kids. What is their take on some of the crypto stuff? Are they into it, or they're not used to it? Are their friends talking about it?
Okay. So I know you have a 5-year-old too. So 5-year-old was talking about Bitcoin the other night at the dinner table. So, I mean, yours probably has picked this stuff too, which I think is great. So they're all into it. They all trade, they all have owned different things. And because I think, when you look at it, my son is about to go off to college. I mean, he was saying he wanted to work for a hedge fund. This is many years ago. And I was like, why would you want to work for a hedge fund? That's going to go away, right? Why would you want to be in this space? And of course, he's become very, very involved and avid in this space. So I think that it's cool. But yeah, we all drink the Kool-Aid, I guess. So it's interesting.
Will he join maybe a crypto hedge fund? Like, I'm assuming he's into finance, and like, is this kind of up his alley in the sense of crypto and finance?
So he works with us here at he helps with ecosystem development here at DMM, and then he's about to go off to college, so he's applying to different schools, but he's looking specifically in blockchain and finance kind of schools. So yeah, that's exciting. I mean, I think it's great. And again, we're all here because we believe this is the future. And the great news is this is just I think we're at the very, very beginning of something huge.
Yeah, and we partnered blockchain. We have a blockchain education alliance with like the top 20 blockchain companies in the world, and the MasterCards and Binances and all the Rolls Royce. But we partnered with 80 plus universities, students, organizations, and universities in general. What have, at a high level, like, has your son or yourself, while you're looking for a blockchain finance, are there I know what schools we're part of, but like, is it kind of common to see blockchain courses offered, or crypto and stuff like that?
Yeah, so we have like we talked about Draper. I didn't mention Collaborative Ventures. They're an investor as well, and Steve McKeon is there. He's a professor at the University. He used to be at Berkeley, and now he's still at Oregon. And he's big into crypto and stuff. Great guy. And so he had highlighted certain universities that were good. I know Cornell was good. Stanford was one, I believe. MIT,
Yeah.
NYU. So it was a shorter list of folks. And I get one of the things I do think though challenging is that a lot of the professors aren't actually building stuff in the space. So it is a little bit more theoretical. And I think that programs like Adam, what you guys are doing and getting this knowledge out there, because the real knowledge, I think, unfortunately, can't be learned at college right now. I think in maybe 10 years it will be. But right now you actually have to learn by, listening to your stuff and talking to other people in the industry and the people actually building, which is the key, I think.
No, you're totally right. And, we kind of experienced this a few years ago when we kicked off. So we've all been in the space, I don't know, depending on who you ask on the team, like, 4 or 5 plus years kind of been in crypto one way or another. And the education front, obviously, like you said, you have your Berkeleys and your MITs and your Stanfords, but there's a lot of other schools that didn't have anything. And then the students started starting their own clubs. Everything's student led, actually, what we come to find out. And so we started sponsoring their hackathons and sending them pizzas and like doing our best to sponsor their meetups and conferences and stuff like that. So it's interesting to note, and I've been having discussions recently, you're right. And there's not, and I asked them that point, I asked them point blank, like, are there developers or are they, economists or like from the financial side, the business side? Are they from the legal side? Most of them are from the business side, but they're starting to come around on the developer front. And what we're trying to do is sponsor their projects, right? Like provide, grants and research funds and all that to spur innovation, and we will help them like, office hours to get something off the ground, because that's what I want to do. And it could be cross campus. So I'm even opening it up to like, if you have 3 developers here and we have 3 over here, like that's, we're good to go. We can do a cross campus challenge. So I think at some point, man, I think I would love to have you on maybe as a guest speaker at one of these schools, right? A guest lecture, if you don't mind.
No, sure. Happy to do so. And I think it's great. And you hit on something really important. The students are starting these groups themselves. That tells us something very interesting. There's this broad-based interest and of what we're doing, what everybody in this space is doing. There's broad interest to adopt it, to learn about it, et cetera. I would challenge you. There's probably not a ton of other things that the kids are using that initiative to start to push for this type of learning and clubs and stuff. So I think that's great for our industry.
And I've told these students that too, like your Berkeley's, that's student led. Obviously they have some support now, but even now, when it got kicked off, they had to teach the classes. They had to learn themselves. They had to teach the class. They had to do, provide their own TAs. I think maybe they needed one faculty member to support it, and that can be a little challenge because there's not too many professors, like you said. A lot of them are teaching distributed systems and computer science, engineering backgrounds, but even then there's still not too much professors out there to teach these classes. And I tell them that, like, don't wait for anybody because a lot of the ones that you see, like I said, it's student ran. They did it themselves. They're doing consulting. They're, taking advantage of the opportunity. But I would love to bring you in. We have some calendars and I'll follow up, but a lot of these students want guest speakers. And I think, what you built and your journey is valuable to them to listen to.
No, happy to do so. I think it's great. I mean, we need to encourage as many people as possible because what we're getting, and that's one great thing, you have tons of really smart people working in this space, and that's really cool.
And I think that's very interesting. What we just, I've noticed that too. There's a lot of bright minds, and it's scary in a positive way that it's pulling in, right? Like gravity. It's soaking them in, and that's a good sign in general. And it's just going to be kind of an evolution of this technology. And like I mentioned at the beginning of the conversation, the AI, the ML, the IoTs, like blockchain is going to touch every aspect depending on who you talk to. And regardless of industry, healthcare, oil and gas, identity, all the above, right?
Yeah, no, we're at the very beginning. And I think the students pick up on it. It's going to be a great career. It's a career for the next 50 years. I mean, it's great.
Totally. Well, I think we've come up on time here, Greg. It's been a pleasure, man. I'm glad I was able to take on this meeting with you and some very insightful knowledge. And I'm glad that we get to share it for the conference.
Great. Awesome, Adam. Great chatting. Appreciate it.
All right. Yeah, appreciate it. So all of you tuning in, this is Greg Keough, DMM Foundation. Please check it out. Greg, where should they go to learn more and kind of dig deeper?
Yeah, so if you go to www.defimoneymarket.com, you can see the white paper, everything. You can try it out. So go at it.
Cool. Yeah. And you can find him on YouTube and various other social platforms on the projects. So without, we'll go ahead and sign off here. Appreciate everybody tuning in. Thank you for watching Reimagine 2020. We hope you enjoyed the conversation, and we'll see you again.